Let's be honest, thinking about taxes for your side hustle, it could feel a bit daunting, can it? Well, you're in the right place. To help you get your head around it all, the experts over at My Tax Accountant, one of the UK's most trusted firms, have put together everything we're about to cover.
And today, we're getting into something that's super important right now: self-assessment red flags. Basically, we're going to look at how you can avoid getting an unwelcome letter from HMRC about your side hustle, especially as we're now in 2026.
Okay, let's kick off with a massive number: 55 billion. Nope, that's not the national debt. That's how many little pieces of data HMRC's supercomputer Connect holds on UK taxpayers. And yeah, that means you too.
What that really means is, right now, in 2026, HMRC's view of your side hustle income, from your Vinted sales to that bit of freelance work, it's clearer than ever before. So the real question is, are you ready for that kind of spotlight?
All right, so how are we going to get you ready? We'll start by looking at HMRC's new digital detective. Then we'll get to grips with that all-important £1,000 rule. We'll also cover the common red flags that can trigger an inquiry, figure out whether you should use the allowance or claim expenses, and then we'll wrap it all up with a simple checklist to keep you on the straight and narrow.
Okay, let's jump right in with that digital detective. Look, the most important thing to get your head around is this. The days of your side hustle flying under the radar, they're pretty much over. Just think of every single one of your online transactions as part of a permanent record that HMRC can look at whenever they want. And the system making all of this happen is called Connect. It's a seriously powerful bit of AI that hoovers up data from more than 30 different places. We're talking your bank, social media, and this is the big one, online marketplaces like Etsy, Vinted, and Airbnb. It then stitches all that information together to build a really detailed financial picture of, well, every single one of us.
And you can see just how fast this has all happened. The whole thing kicked off back in January 2024 when platforms started collecting seller data. A year later, in January 2025, they had to start sending those reports straight to HMRC. And now, from January 2026, it's expanding even more to cover things like crypto. It's a one-way street, really, heading towards total financial transparency.
So with HMRC seeing so much more, you've really got to know the rules. And for anyone with a side hustle, the absolute most important number you need to remember is £1,000.
Right, so this is officially known as the trading allowance. Put simply, it's a £1,000 tax-free allowance on any income you make from self-employment or just casual jobs each tax year. It's really just there to make life easier for people earning a little bit on the side, selling some crafts or doing a bit of freelance writing.
Now, you want to hear this part because this is where a lot of people get caught out. That £1,000 allowance, it applies to your gross income. That's the total amount of money that comes in before you deduct any of your costs. So imagine you sell some jewelry on Etsy and take in £1,200, but you spend £400 on materials to make it. Well, your gross income is still that full £1,200, so you're over the threshold even though your actual profit was only £800. Getting this difference is absolutely crucial.
And this brings up a question that the accountants get asked all the time. People wonder, if I've got a couple of different side hustles, do I get a £1,000 allowance for each of them? One for selling clothes on Vinted and another one for doing some delivery driving on the weekend? I wish I had better news, but the answer is a straightforward no. You get just one £1,000 trading allowance per tax year, and that has to cover the income from all of your side hustles added together. So if you earn £600 from one and £500 from another, your total is £1,100, and yep, that puts you over the limit.
Okay, stay with me on this one, because this next part really does affect almost every single person with a side hustle. Let's talk about the common red flags. What are the specific things that make that Connect system at HMRC suddenly take a much closer look at your tax return?
A lot of the time, it all starts with this kind of thinking. Oh, it's just a hobby, It's not a real business. People figure that because they enjoy doing it or because it's not their main 9-to-5, the tax rules don't count. But here's the thing. As soon as you earn more than that £1,000 in gross income, HMRC sees it as trading, and that means you have legal responsibilities.
So, what exactly is the Connect system looking for? Well, the number one trigger is a data mismatch. For instance, Airbnb tells HMRC you earned $5,000, but you only declare $2,000 on your tax return. That is an instant red flag. Another common mistake is thinking cash payments are invisible. They're not.
Big, unexplained jumps or drops in your income from one year to the next will also get you noticed. Same goes for trying to claim your personal shopping as a business expense. Oh, and repeatedly filing or paying your tax late is a big no-no. And a massive one that's so easy to avoid is just missing that 5th of October deadline to register for self-assessment in the first place.
Right, here's a really simple but golden tip for you. Go and open a separate bank account just for your side hustle. It doesn't even need to be a proper business account to start with. Honestly, this one little change makes tracking all your income and expenses 1,000 times easier. And more importantly, it gives HMRC a really clean, simple record to look at, which makes an inquiry way less likely.
Okay, let's make this really simple. As soon as your gross income tips over that £1,000 mark, you've got a choice to make. You can't just ignore it anymore. You have to decide which way you're going to work out your taxable profit.
So you've got two main options here. Option one is to just use the £1,000 trading allowance as your one and only deduction. This is definitely the way to go if your actual business costs are less than $1,000. It's super simple, no need to keep a shoebox full of receipts. Okay, option two is to claim for your actual business expenses, adding them all up. This is the better path if your costs are more than £1,000 because it'll bring your taxable profit down even further. The catch? You've got to keep good records for every single penny you claim. And remember, you can't mix and match these. It's one or the other for the whole tax year.
All right, let's pull all of this together into a clear plan. To help you stay compliant and, more importantly, stress-free, here is a simple 5-step checklist you can follow right now.
Okay, step 1, track every single penny that comes in. A basic spreadsheet or an app is perfect for this. Step 2, keep every single business receipt. And yep, digital copies are absolutely fine. Step 3, really get your head around the wholly and exclusively rule. It just means you can only claim for costs that are purely for your business. So, the wood to build a chair you're selling? Yes. A new suit to wear to meetings? No. Step 4, if you earn over $1,000, you must register for self-assessment by October 5th. Don't miss that date. And finally, step 5, and this is a game changer, get into the habit of putting aside 25 to 30% of every bit of income into a separate savings account. Trust me, it stops any horrible surprises when your tax bill lands.
So, as we start to wrap this up, I just want to leave you with one final thought. It is absolutely brilliant that your side hustle is taking off, but is your tax planning keeping up with that growth? Because being on the front foot with this stuff is always, and I mean always, better than waiting for that brown envelope from HMRC to drop on your doormat.
And just a quick important disclaimer, of course. Everything we've talked about today is for general guidance and is based on the rules as they stand in January 2026. Tax laws can and do change, so this shouldn't be seen as a substitute for proper professional advice that's tailored to you.
So if any of this feels a bit overwhelming, or if your own situation is a little more complicated, the absolute best thing you can do is have a chat with an expert. This is exactly what the team at My Tax Accountant helps people with every single day. They'll give you that peace of mind and make sure you're doing everything by the book. All their contact details are right here for you.
Thank you so much for watching, and for more clear, practical advice just like this, please do make sure you subscribe to the My Tax Accountant channel. It really helps.